When we talk about high probability setups, what we have in mind is the most common setup, and that is a two-legged pullback. Market likes to move in pairs of twos, and this is why we are looking at the 2000 tick chart, because on tick charts the two-legged pullbacks is the easiest to spot. Institutions and hedge fund managers, the big players, they're the ones moving the market and we're just following them, and on tick charts they cannot hide their intentions. And when today started with an uptrend and prices pushing above the EMA, so this is a good indication the price is truly trending higher. The first thing I need to do is I need to draw my trend line, because I want to see where the break of a trend line is going to be. And now that I see the break of a trend line on this third bearish bar in this bearish correction, my first instinct is to still be looking for a new extreme. That's what's going to happen most often than not, according to price action. We should not start reversing and trading against the trend just because we see the break of a trend line. That's not the proper way to go. And since I already mentioned that market likes to move in twos, we have a new low high right here. So I'm counting the two-legged pullback of this. I'm counting the second entry, and this is just a first bearish leg and a first bullish move up. So I'm not taking this trade, I'm being patient. All right, the market keeps working higher. We have a bearish correction, but we didn't trigger lower, so we're still continuing to work higher. And we finally trigger higher, and look what happened next. We have a big bearish bar, and it looks like market may be reversing. It looks like market is about to push down, but that's not how you want to trade. We still don't have a new high. We're still above the EMA, so I have to respect the rules. All right, and look what we have here. We have a first leg, pullback, second leg. I'm going to mark it with the arrow like this is the first leg, and this is the second leg. It is a little bit harder to see, but it is there. Okay, and look what we have here, a big bullish bar after this big bearish bar. And look, we're getting very close to the EMA, and this is now a two-legged pullback in an uptrend while we are waiting for a new extreme. This would be very close to being a high probability setup, and this was the first trade for today that I took. And I was a little bit unsure about taking this because there's a still little gap between the EMA, and you preferably want to touch the EMA because high probability setup is located at the key entry point, trend line, support or resistance line, or the exponential moving average. I'm going to do next, I'm going to mark the low of the day. This is where the market closed and today's open. And look what happened next. I'm still in this trade, and market kept chopping a lot. It was fairly difficult to sit in this trade for a while because this took really quite some time. But eventually, if you're patient and you have built up your mental strength, mental fortitude, you will endure this pullback, and market kept pushing higher. And notice how market is truly creating a new extreme according to perfect price action. And what happened next after market creates a new extreme? Well, we can expect straight up reversal or possibly correction. Market can continue making new highs, new highs, new highs, but this is not going to happen so often when the market is extremely steep like this. This was extremely steep move up, break, an extremely steep break up. And if market keeps making new highs, then you know it's one of those strong uptrend days and you just keep buying. So right now we're expecting correction, or we are expecting a possible reversal. And market is starting to sell off sharply. EMA is putting no resistance here. So this is looking like a very steep rally up, and at the same time this is looking like a very steep move down. Look what we have next. Price created a first entry long. Remember, market moves in two, so this is the new high. Price is pushing below EMA. EMA is ignored like it's not even there, and we have a first attempt by the bulls to continue still in this trade to go long. Now, high probability setup is a second entry with the trend at the key entry point, but also a failed second entry. And why am I right now looking for failed second entry when this downtrend is being formed on the chart? Well, because the uptrend played out with the break and a new high, uptrend is over. And since we are pushing below EMA, I'm now looking for two failed attempts in the previous trend's direction. Previous trend direction was bullish. Unfortunately, this first entry short, this first failed first entry long doesn't even trigger, and eventually market just plummets lower. There is no way to enter here. There is no high probability setup. This is just a lower high setup, fairly tempting. I really wanted to wait for some additional trap. It didn't give me the trap. Big bearish bar, market sold off for no reason. And now, as the market keeps working lower, I'm going to draw my shortened trend line, and look what we have next. we have finally failed second entry long. New high, first entry long, pullback, 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 second entry long. This is the second bar we triggered above its high. None of these bars prior, we didn't trigger above none of these bars highs. This is the second entry long and it failed. And the second entry long technically didn't fail yet, but we don't know it. We treat this as a failure by the next bar, with the next bar being bearish. Okay, same thing right here. We have a first entry long, but since the next bar right here is bearish, we considered it as a failure because we cannot wait for price to truly fail the entry, and we would already be entering too late. So this is what we as a traders need to consider as a failure, the following bar being in the direction of its current trend. Okay, so this is a second entry long failure, but take a look. This is known as a reversal pattern, but we already moved way too low down. You're going short way too late, and you're far away from key entry point, from the exponential moving average or the trend line for that matter. And the best reversal pattern is the one that you haven't moved too far and you right second entry long failure right below the EMA. If I'm going to take a look at the previous day, this is a textbook reversal pattern. New high, first entry long, pullback, second entry long, small move right below the EMA. EMA is holding, bar is touching the EMA. This is textbook reversal pattern. This right here is far away from EMA, and how unfortunately we cannot take this trade. The market keeps working low, keeps working lower. It worked, but you want to stack your odds in your favor. Okay, look what we have next. At this point on, it's starting to look really bearish. Okay, at this point on, I was really not looking for longs at all. And why do we not look for longs? Well, because uptrend is over, downtrend is working lower, and we don't even have a first break of this downtrend. So first we need to wait for a break of a downtrend, new low of the downtrend, and after that we can potentially look for buys. Okay, and look what prices keeps working. We have a touch of the EMA, it just touch of the trend line. It just trapped everybody in because this is just a first entry. This is the new low, and you have a first entry short, instantly failed. This is why first entry is not high probability setup. And look what happened next. You have a new low, first entry short, pullback, second entry short is about to trigger and keeps working lower. This is a two-legged pullback, second entry short, but this is not a high probability. Even though we have a first break of this uptrend, of this downtrend, and our first instinct is to be looking for new extreme, which we are correct in our analysis here. We are extremely far away from EMA, and you never know when you're gonna just pull back a little bit higher. In this particular instance, market just plummeted lower, and there is nothing we can do. I still don't like this trade hindsight because we are so far away from EMA, and you already moved too low. It will bounce off you, a lot of times. So be patient here. You just have to wait and be patient here. And look what market keeps pushing lower, and you finally have a break. You finally have a new low, and you're getting very close to this low of the day, important key level, one of those key entry points. Okay, but this was extremely steep move down, extremely strong. We traded almost 20 points down. So it's really hard to start buying. We don't have a failed breakout yet. We're not even touching the support. We don't have a nice bullish bar either. By the time you have a nice bullish bar, it is probably way too big. There's not enough room to EMA. I just don't, and it's really sideways at this point. 1, 2, 3, 4, 5, 6, 7 bars going sideways here. It is extremely tempting to buy this because price created a break and a new extreme according to price action, but we have to be patient. And I'm just sitting here, I'm being patient, okay? I'm not still doing anything. And look what happened here. Market keeps working higher, and we have a first entry short of the EMA. And right now I'm in two conflicting beliefs because this was a strong move down, and look how EMA is instantly holding prices, because if there's a lot of buyers at this key level, we're supposed to push above the EMA. Okay, so I'm expecting a lot of buyers jump into the market right now because the downtrend played out and push above the EMA, and at the same time this downtrend played out, so I'm not looking for sell. So I'm just sitting on my hands patiently, and I was thinking this short may work, and it just worked for a scalp, created this bullish bar. Okay, so when I was watching this, I was thinking to myself, okay, now we for sure are going to push above the EMA and rally up from here. But look what happened here. This is a lower high setup of this, and the EMA once again holds prices. This is not what's supposed to happen. All right, this is not what's supposed to happen. If there's a lot of buyers here, we're supposed to be pushing above the EMA right on the first time. Take a look what happened right here. Take a look how we ignored the EMA after new high was formed, and take a look what happened right here. Does it look like we're ignoring the EMA? This is the nuances that you have to pay attention to. This is not even close to being reversal pattern. This is not even close looking for longs. EMA is rejecting prices big time, and I was extremely tempting to show this market. I was preparing my limit order in a matter of fact here, but this was bar, had a bullish body. It didn't look too bearish, so I was patient here. I still was feeling a long little bit because I'm following the rules and price action. And look what happened next. We ticked one tick higher and instantly turned down. This was my second trade for today. My first initial entry, or what I wanted to enter, I put my limit order at the close of this bar because this is too big bearish bar. It doesn't seem like that, but as you guys can see, this is 3 points, maybe over 3 points here. So I wanted to sneak in a little bit early, but once we started pushing lower, hold on, let me see, where did I enter? All right, so yeah, I have entered at one tick back. All right, yeah, I snuck in a little bit, one tick back, and this is where I entered. And take a look at this. This is the first entry short, pullback, second entry short. This is the two-legged move. We actually had a little jog right here, move higher and instantly turn down, but this is clear one leg, pull back, clear second leg. This is the high probability setup, just like we had here. First leg, second leg. This is what we have here. First leg, pull back, second leg. Here it is once again, pull back, first leg, second leg. This is the pattern that you need to train your eyes to see, because it happens so often, and institutions, they cannot hide their footprints. We're just following them. Doesn't matter whether the market goes up, doesn't matter whether the market goes down. We can take the two-legged pullback on our way up and on the way down. It don't matter what they do with the market. Let them do their thing. They're the millionaires, billionaires. They're the one who moves the market. We can take a few money from them and they will not even notice. So this was my second entry for the day. Second entry short, EMA is holding prices and market kept pushing lower. I took my run out here. And why am I deciding to take my run up down here? Because we definitely now have a break at a new low, but I could have placed the trend line a little bit tighter, and the trend line might have been more like this. Okay, this was my idea, but in case the trend line is like this, even though I don't like it too much and there's still a little bit of break, this could be a first legit break and a clear new low. But look at this, we are below the key level, and you know what that means. And when the price breaks below important key level, you have to realize that most breakouts will fail. Most breakouts of trading ranges, and this is a trading range. This is a move up and move down, so this is a trading range. The net of it is 0. So once we are breaking below this important key level, we had this bar, and by the time I was about to quit my trading 2-0 for the day, and I was satisfied. But take a look what happened next. If this bar was a little bit more bullish, I probably would have pulled the trigger here still, but I didn't like the bearish body. But look how far away you're from EMA. EMA acts as a magnet. It will pull prices closer to it. A lot of times this is a failed breakout below this key level. This is one of the high probability setup, even though it's not a second entry or any form of two-legged pullback. I've been demonstrating it over and over again in my last video as well. Most breakouts of trading ranges will fail, and you will just pull back to the breakout area a lot of times. And let me mark even this trade. Now that I'm looking back, a couple of aggressive traders could have taken this second entry short, even though it's not the key entry point. A lot of aggressive traders are watching the videos too, and I don't want you to feel that you were doing something wrong because you're working lower. This is a steep downtrend, and this is a two-legged pullback, second entry short, which a lot of times you cannot ignore. But I still would advise beginner traders to wait for price to get key entry point. Wait for price to do this, okay? And look what happened next. Quick, easy scalp, and we have a first entry short, pullback, second entry short. And now it's the dilemma. Once again, once we have a break and a new low, we are expecting the same thing I'm expecting right here. I'm expecting a rally higher through the EMA and potentially get about this support now that now acts as a resistance, but it will act as a support. And once again, it's not happening. Here we have a high-low setup, but we cannot even trigger above higher-low setup. We just continue working lower. Take a look. So this is rather confusing at this instance. And to be honest with you, you have to realize that you cannot move above the EMA, not once. And this means that, there's a very few buyers. It's still going to work for failed breakout, but you have to adapt to the market and you just have to keep selling at this point on. All right. And look what happened next. Market keeps pushing lower, keeps pushing lower. You have a first entry short, Even though it's off the EMA, you don't want to take first entry after all that move down, okay? And you have a first entry short, pullback, second entry short. When I saw this micro double top right here, I was tempted to pull my key level a little bit down here, and you guys can see this is a double confirmation of this key level that we have right here. What I'm going to also do, I'm going to draw my trend line of break new high, and here we are still inside of this uptrend. So this is a little bit aggressive entry, but looking back now, I like this second entry short because market is clearly indicating that a lot of sellers are still in the market. We still closed above EMA every single time. Plus, there is this trend working lower. This is looking like a spike and a channel pattern. This is very steep move down, and the price keeps consolidating a little bit sideways, still going lower. All right, so this is the first entry short, second entry short. So use first entry short, second entry short, first entry short, second entry short, two-legged pullback here, two-legged pullback here. This is all the magic that happens on the chart. You don't have to have holy grail. You just keep it simple, be mentally stable, and just follow the rules, and market just plummets. All right, and market keeps pushing and just starting to get a little bit, you know, just choppy, not really clear price action. And once again, you get a first entry short, you take one tick higher, and you get a second entry short. But this time you already you got once again above the EMA, and you're starting to work sideways a little bit. You have this short-term trend line in way once again, but it's coming off this spike and a channel pattern now. But to be honest with you, I didn't like it too much, and by this time it already gets too choppy and too congestion-like, and the trade still would have worked. All right, don't get me wrong, but this is why you can see how effective the second entry just is if you keep selling every second entry. This bar was a little bit more tempting because this is now the high swing, and your first entry long, pullback, second entry long. So this would be a failed second entry long in a downtrend. We closed below EMA, but by this time you have 9 bars going sideways, and the EMA is exactly in the middle of those bars. All right, so you have to be patient. You cannot enter during this congestion when you're already moved quite too bit. All right, this was a tempting trade, this lower high second entry short, not gonna lie, but I think it's better to be a little bit more patient. And here we have a breakout pullback pattern that I like taking. Why? Because most breakouts of this congestion fail. So we have a breakout lower, it failed, it pulled back, you take one tick higher, instant reversal, big bearish bar below EMA, and you're waiting for a new low of this channel working lower. This is a big bearish bar. You can see a minor resistance, and market just plummeted lower. And you have a similar situation if you have right here. You have a new high, you have a first entry long, pullback, a form of a second entry long, failure. EMA is holding prices once again, and market just barely made the scalp. But I think you're getting way too close to these lows. Market is starting to work really sideways now. It just struggles to push lower, but it definitely is struggling to push higher. And now you have a break, attempt to make a new low. So when you're watching this, plus you're working sideways now a lot. Okay, you're working sideways a lot. So this is starting to look like a trading range. You have another first entry short, second entry short. This is the market just likes to move into. This is such a common pattern. And look what happened. It worked barely. You still would have survived because your stop loss is one tick above the signal bars every single time. So you would have survived. You would have gotten your scalp. But I think it is better to stop shorting here after you have a break in a double bottom. And plus the market is working sideways. The EMA is getting extremely flat. It's not pushing lower like here. And market just keeps going sideways right now. Okay, so we're sitting on our hands because we don't want to go short now, but we don't want to pick the bottom in this mess either. This was the first failed breakout. It works for a scalp, and market just continue working lower. So I'm not going to argue with the market. I'm not going to keep buying. I'm just going to be patient. We have a first entry short, failure, big bullish bar. So what we are waiting for, the same thing we were waiting for down here, but to the upside, reversal pattern. We're looking for failed second entry short. And does it come? Yeah, it comes all the way up to here. Is this high probability setup? Yes, but this is not the best reversal pattern. Once again, you're far away from EMA and you've moved way too far. If you go back to watch my live video session, there was a reversal pattern right at the EMA, second entry short failure. That's the one that you want to focus. Now you're far away from EMA and you already moved too high up, and you don't want to take this. Even though it worked even this one because reversal pattern is powerful, but you want to stay patient and now the market keeps working and keeps going sideways a little bit. Now we have a break and a new high, so market is correcting right now. So hopefully you guys find the video useful. Pay attention to these two-legged pullbacks. It's the only setup that you need to follow. Trust the process, be patient, don't argue with the market. If once you see a break and new low, but you cannot push above the EMA and two double tops right here and your EMA is holding, just take a short here. Don't argue with the market, okay? When we see a break and new extreme, we're expecting straight up reversal or possible correction, okay? And this is not reversal, so this is a correction, so we can keep selling, okay? Don't argue with the market, trade the market you have. And once you keep pushing lower, it was fairly hard to find this pattern, but as you keep making new lows and you keep working lower, there is a little bit, there's other pattern in there, but you don't have to find the pattern. That's the beauty of it. If you just focus on the EMA and you take every second entry at the EMA, you will be profitable. I can guarantee you that. If you have the mental fortitude to keep taking them, you cannot be one of those traders who is afraid to sell here, sell here, sell here, sell here. And by the time he watch all of these entries work, and now he's like, okay, I'm gonna take this big bullish bar, this big bearish bar. Look at this, look how juicy it is. I'm gonna go short and I'm gonna double my position because I missed all of these contracts. And what's it gonna do? It's gonna go a few ticks, reverse on you, and you're probably gonna move your stop loss because you don't want to admit you're wrong. You don't want to lose the money because you've missed so many entries, and the one entry you pick and that's going to be losing a trade, hell no. So you're going to move your stop loss all the way up to here, and what could have been the easier days of your life ended up being is just one gigantic losing trade. So remember, cut the losses as quickly as you can, leave the stop loss where it is, let the runner run, and I'm going to talk to you next time. So smash the like button, subscribe if you haven't, and enjoy the weekend. Take care, everybody.